right. Well, hello, Maverick Traders. It's trading room time. Approaching the holiday season. I can't believe it's the 21st of December already. It's kind of a bummer that the holiday, Christmas is on Sunday, for heck's sakes. What's up with that? But we're getting near to it. One other thing that's interesting about this date is this is a supposed start of a Christmas rally because we do have the following Monday off. So we have today, tomorrow, and Friday for this quote-unquote rally that you guys have heard, seasonal rallies, to happen. But let's talk about that. Let's talk about a few things. I've got my 2 cents. Follow your personal plan and take responsibility for the outcome. So since our last market update, we had a pretty good sell-off after Powell stayed hawkish. Now the CPI showed some inflation was slowing. However, Powell said he really thinks, and he's going to lean on, he said this, and this is why I've got this down here, he's going to lean on a strong job market to be able to weather the rate hikes that they are still on track for, and they are looking for over 5.5% or over 5% is what their target rate is. So really good news on the inflation side, but then still hawkish on the Fed outlook, and the market sold off. Now, they did find support levels, and we'll get there in a second. But we'll see if they are going to hold, and if we do get this Santa Claus rally, I'll make reference to it again. But we are moving to an optimistic sentiment, at least through the holidays. And what it was the consumer confidence number, we'll get there, is really high. But we are still, and the jobless claims last week was less claims. So the employment that Powell was referring to is intact so far. Consumer confidence increased, maybe because the consumer price number was showing signs of decline, but the retail sales were lower. Isn't that kind of funny? Now, I still get the push-pull. I'm still a little bit confused when it comes to these economic events lately, and I think the reason is because they're trying to adjust. So I'm seeing optimism in it because I do see the way that the market's gapped up on Wednesday. I do see that the initial reaction is people want to get into these markets, whether they stay in it or not. We'll talk about that here in a second. But let's take a look at the trade ideas, and this is what I thought was really fun. I didn't change a few of these. Well, I changed the charts, but RTX from last week, PM, ADM last week, CrowdStrike, Mosaic, BX came from last week, and they're all great. They're doing really, really good. So if you had the gumption or the ability to sit through some of this push and pull in the markets from yesterday, or I should say last week, and getting into this week, you're probably going to be okay, folks. And I'll talk about my outlook here in a second. But let's jump into some of the trades that did well. This is RTX, Raytheon Technologies. It was sideways on last Wednesday, and it is sideways right now. It hasn't moved really too much between that 98 and 100 level. And it just looks really good. So here's your sideways trade for you guys out there. Or if you think we might get a little bit of a Santa Claus rally, we could see this thing float up to the 102 mark. I'm going to move over to P&G here. Procter & Gamble is actually showing a little bit more strength than just the up to sideways. This is more of an up. And I do like that volume that we saw a couple of days back when it just stopped. These were the markets fell apart, and this just stopped. It didn't. A lot of money coming into it. Really good resistance, or I should say, support level at this area. And it looks like it just wants to take off. Obvious target around the 154, 155 level. So PG looks good. It's in a consumer defensive. If we do get the Santa Claus rally, I think this thing just floats higher. And then Merck. Merck's another one. Check these all out, by the way. Look at the healthcare, manufacturing, consumer staples, defensive, all the big stuff that's been around for a while seems to be doing pretty cool. And I think that, and you'll also see here in a second, the Dow's jumped pretty big. It's bounced pretty hard off of its moving average, actually. So here it is. It's consolidating around the 110, but I would not be, well, at least for through the end of the year. And all this is going to be through the end of the year, guys. I'm not going to say into January. We'll talk about into January next week, because we'll only have a couple of trading days going into the New Year's holiday. which is once again, those markets will also be closed following that Monday. So keep in mind that the 26th the markets are closed and the 2nd of January the markets are closed. So it's going to be difficult to make some trades here and then be able to sit through that and realize that we're going to get a whole slew of volume come Tuesday for all those traders that have been penned up over the holiday weekends. So nice, I like it. Ascending, sideways, diagonal, all sorts of cool stuff. Now this next trade, this is AKRO. This is our sideways trade, and I wanted just to show you guys this because this is what's happening. This this is what's happening. Here's that gap up. This was a sideways trade. Understand, folks, we talked about this right here. This is Wednesday of last week. Check that out. It broke out. Oh, my 45 butterfly looks awful. Gaps down. Oh, geez, my 45 butterfly looks awful. 3 days later, your 45 butterfly looks to be right in the money. And I actually like this as if it's going to revisit the 45 and stay there. This actually might hit it and roll over, so this might be a bearish chart now in the longer term. But why I left it up on the sideways is just to let you guys know this is how it feels. This is what's going on. I made a statement 2 weeks ago or last week even saying I just don't know how these markets are going to sell off. I don't think they're going to sell off into the end of the year 6, 8, 5%, whatever it was. And the next day I said that. The markets proceeded to sell off for the next few days. I'm still sticking with that. I don't want to show my hand, but folks, I think that we rally all the way back up to break even by year's end. There's my 2 cents. Now that could change. We'll talk about it a little deeper when we get to the charts. But this is the kind of stuff you have to sit through if you're going to play these markets and play this sideways, which you're 100% right on, guys, by the way. Congratulations. We really wanted just to kind of toot our horn. You just have to have the ability to sit through it. Okay, that being said, here's another one that I do like still. This is Archer Daniels. We talked about it sideways last week. It was funny, folks, because when I replaced these slides, I just replaced them with this week's chart from last week. So here we were last Wednesday, and here we are this Wednesday. I'm okay with this playing a symmetrical triangle breakout to the upside if you're expecting glass half full and the bounce off the bottoms in the markets and a Santa Claus rally. Or if you just want to believe in sideways that we don't go anywhere, there's that as well. I'm also going to echo you guys, and if you haven't had a chance to see the midweek or the end of day post, yesterday, Corey, you got to watch it because it's wonderful. This is truly a trader's market. This is the next 2 weeks is just positioning and calling your own shot based on your plan and your outlook. We talk a lot here about Maverick, that I might be a +1, you might be a -1, and we could both make money in the same market just based on what we decide to choose when it comes to sectors, strength, move, trend, things of that nature. This is exactly that times 10, right? This is going to be, if you want to play a +3, I understand why you would. Why you want to go for a -3, I understand why you would, because some of those will raise their heads. So this is definitely player's choice, if you will, for the next couple of weeks. This is PM. Now, I like this on the sideways side, but it looks like and it's also struggling to hold on here. You can see a little bit of a descending pattern going on, but it looks like it really wants to stick close to its 20-day moving average. Let's go back up to this resistance. You can see it slip below it, but it does have a shoulder here from August that it could actually consolidate at. So it really is just... Now, let me go ahead and give you my 2 cents on this one. This would be kind of a fun condor if you wanted to open this up a little bit and play maybe a 104, 102, 98, 96. Now that's a big condor there. You'll find that these are very difficult to sit through, especially with the volatility we've seen as of late. But it does give it a pretty wide berth, where Archer Daniels, the last one, I'd be cool with a tight butterfly and just maintenance as it gets to expiration. So just a couple of ideas on how to trade some of these. Let's move to the bear side. These bears haven't changed. This is MOS. We talked about it at this day, and it did break down, and it's come back, and it looks like it's trying to kiss it here. So for you -1, -2 traders out there, this is a beautiful bear rally set up to where if the markets do roll over, this would be a great candidate. If you don't believe in that, play it something sideways. Or you could see if it's going to rally all the way back up to that 48 of this moving average, the 20-day. Right? Play something a little bit counter trend for the shorter term. And these are difficult trades to make, especially this close to the end of the year. I'm just going to go ahead and let you guys know that I'm not. I'm just going to sit and watch to see where they end up and see what happens for the next little bit. A lot of that has to do because both my kids are home and they're just driving me crazy. All right, here is CrowdStrike. CrowdStrike is one that, boy, you guys have just been so perfect at this. We talk about this uniform move. Hover, down, up, down. Guess what it just did? Up. We talked. Well, let me go ahead and erase this. This is when you brought it up last week, folks, right there. There it is. We talked about it here. A little bit of a short-term target to this point, and we absolutely exceeded that. Congratulations for you guys that have traded it. I still actually like it, maybe as a little bit of a trend sideways, or if you want to just put it on your watch list and see if it can't do this and participate in a late year rally with the rest of the markets, it might be setting itself up for another move to the downside. And also echo what Corey said, a lot of these bearish stocks in his watch list are too beaten down. They feel a little overextended, and he's absolutely afraid of a bounce coming in the last little bit. Even though the markets are in a bearish trend, they're still super bearish. There is that susceptibility of a late day or a late year rally that could really mess up some of your bears. This is BX. This came last week. Awesome job, guys. See if I can find it here. It's right around there. So here is that move to the downside. Here is that Wednesday talking about it. If it breaks here, it could be a good trigger. And it did. Thursday, Friday, Monday, Tuesday, Wednesday. There we are. It looks pretty good. Same situation. Sideways to down in the short term, but if you do think we're going to rally, just be patient. Wait for it to come back up and hit some sort of a resistance area. So there are some awesome trades out there. Great trade still. It just depends on, this is pick'em. It's player's choice. You just throw it out there and see if, okay, I've got 2 weeks. Or well, what is today? Let's see. Wednesday, Thursday, Friday, then we got Tuesday, Wednesday, Thursday, Friday. So we got 4, 7, 8 trading days. Jeez Louise. Yeah, 7 or 8 trading days left. But I wouldn't go anything past that. And expect some kookiness. Expect some volatility. We'll get to the main charts here in a second, but you'll see that we had a pretty good move today with no volume, with no volume at all. And that volatility is just telling me that there's no fear in it. I think it was just a big lunge, just a big kind of a washout. Some of the institutions just dumping some stuff, and because they're probably pretty secured with some protective puts already. So let's get into the market analysis, and I'll tell you what I mean. So far, the Dow, the SPY, and the Russells have all turned it around. Now, this is just for the last 3 days. They're actually in the green, so they shook off Monday's move down, had that stop yesterday, and today, net from Monday to today, you could see the S&P and the diamonds or the spiders and the diamonds are positive. Looks like the Qs might get there. They're still negative. They did have a bigger drop on Monday than the others. But the Russell's positive. Oil had a huge move higher. It's only at 77, just under $78 a barrel. And gold bounced as well. A lot of that could do with some of the. I think it's just more of a relief move from the dollar. Corey made mention of what Japan is trying to do. They're trying to manipulate their currency without increasing interest rates by just messing with the yields. Interesting stuff. But so far, everything's super bullish. I don't know if it's optimism or if it's the holiday season, but these markets are holding pretty strong. So let's get into them. Now, here was the conversation that Corey had yesterday at the end of the day post. Where are we in the overall trend of things? Now, I don't have the weekly outlook, but I can, or the weekly chart, but I can still give you kind of what we see in it. So there's this. Yes, this is definitely a big bear rally back in here. We're doing basically the exact same thing. Broke support levels. This is one that we talked about that would stay right through here. Actually, let me just go ahead and erase it and clean it up. All right. So this is that support or the consolidation level that we were talking about on the all-time high here, or something shorter through here through the end of the year. Definitely slipped through that. However, pretty good bounce from previous lows. In this case, just below its 50-day moving average, and it could climb all the way back up to above that 390 level. And you know, guys, usually I pull the class before I tell you, but let's just talk about it since it's up here. This is where I expect it to go. by year's end. That's my 2 cents. Now, does it roll over from there and we have this beautiful bearish move? Well, that's great. Hopefully we do, and we can talk about that beginning of the year, and I'll throw in some bears. Or is this thing really just going to jump right up and retest this 410 over a quote-unquote Santa Claus rally? And then we're going to have to see if it's just going to chop around. Now, Corey and I have talked about this before. We truly believe this is going to be a little muddled over the next little bit, maybe in the beginning of the year, because there's some stuff out there that's already been priced in when it comes to overall weakness. We know earnings are going to be bad. We've seen companies miss. We've seen companies down 60, 70% off their highs. They know that they're going to do bad, but we're also seeing them come off the bottom. So it was just the speculation moves by the institution and their attitude into 2023. I wish I was that fly on that wall, but we don't know. So that's kind of where I'm at. And this is something that it becomes super powerful. Low volume creates a ton of volatility. So we had this really good move, decent volume, I should say, and this gap down, and then we'll have to show that's super volatile. Whenever you get stuff like, let's see if I can get something here. This, where it goes quiet. Well, here's something. It didn't really move much, but when it goes quiet, you can get some pretty good moves. And what I'm thinking about is if this continues, you can see that this stopped here and we've already gapped. I would not be surprised to see something like this. Gap, gap, gap. Really nothing behind it. No sellers to be there. Everyone's gone on vacation already or whatever. And that's kind of where I'm leaning towards. Tradable, yes, it's difficult, but you guys have to understand that you need to kind of pick them. And it's one of those things to where if you're going to get bullish, you got to do it today. And you're either going to be, here, here, or here. Probably nothing really in between. And only for a few days. So it's just going to be a really kind of a day trading market almost. It's going to be pretty interesting. Let's go to the diamonds. And this is just a bull pullback. It's a bull pullback. It's deeper. It's bounced off of its rising 50-day moving average. It's already above that previous resistance at 330, so its next move is back up into consolidation. Same idea here with the pattern. Big sell-off, turned right around. If that volume stays as low as it is, and the the selling has indeed stopped, we float back up to these levels. And I'm going to call it float because I don't see, or speculative purchasing into the end of the year. That also can cause it. So once again, it is a pick'em. It's people calling their shots. Institutions deciding, let's dump this and buy this and see what happens in 2023. It's kind of what's going on here. Here's the Qs. I just said, the Qs just kind of fell apart. But then I went all the way back here and I said, look at this. It's off of some lows that it set in September. And actually, I could go all the way further back, and I zoomed in too much, but it's also in June lows. June lows, it's bounced off as well. So it's pulled back the more than the others. And I don't know, maybe this consolidates a little bit more sideways. We're going to get to the sectors here, guys, because it's interesting, because guess what's leading? Energy. Guess what's lagging? Technology. They've just done it in a really tumultuous, volatile way. Boy, it's kind of interesting that buying and hold, if you just didn't watch the markets every single day, if you're only allowed to watch the markets maybe every quarter for 2 days and then make a decision, and then you can't turn your TV on for another 2 months, you probably would have done pretty well, especially this class, because I can't tell you how many times I keep bringing trades that we've looked at over and over and over, and they've been great. So let's get into some economic news. We love to nerd out on this sometimes, don't we, folks? Well, so where was it? There it is. Consumer confidence. That's a big jump. That's a big jump considering that retail sales were super weak. But employment, jobless claims was down, which means employment is high. That's also good. Housing is still slowing, and it should be, right? We've seen that. Interest rates are definitely going to have an impact on an overinflated housing market. We do have a services PMI and the manufacturing PMI. Those are also starting to go south. So there you go. I've got some contradicting numbers there. But a consumer that is confident, that is not spending, okay. We'll see where that goes. Here is, so we're going to have the jobless claims. Oh, this is great. So I took a look at this snapshot and I realized that's a whole lot of stuff coming out going into a holiday. But it's not a lot of stuff that really can change anything except for the PCE. And we know that this PCE is what the Fed just focuses on. So could we get some sort of weird reaction on Friday? Absolutely. And here it is. Say we get into Friday and this PCE number shows that everything is starting to cool. Can we just rally all the way into the weekend? Absolutely. Absolutely. I think a clean number out of here causes a surge to the upside. Now, I was right the first time, but what I didn't realize is after the gap up, it came all the way back down. So it's going to be a pretty difficult market to trade going into the next going into the weekend. But there it is. There's some stuff to take a look at. I don't think I'm going to pay too much attention to it. I'll definitely lend an ear out for this PCE number, but we'll see what happens with the markets. All right, so let's pull the class. I think you guys already know where I'm leaning, but let's go ahead and have you guys share. Where is that? There it is. Let's launch it out here. And tell me what you think. There we go. It's in progress. Now, it's been difficult because my top-down approach is solid when it comes to bear. It's wonderful. I'm telling you what I'm looking for, but anyways, I'm looking for an absolute bear rally, a pretty strong one. But overall, I think we hit the resistance and we roll right over and fall apart. But just like any good surfer, right? You got to sit out there and wait for your set. If you're not seeing the waves or you've paddled out a couple like I have and missed them, it's best just to float out there in the water and relax a little bit, wait for your set to come in, and then I'll start paddling for the next wave. How's my surfer analogy for you guys? Fun? Anyways, so yeah, that's kind of where I'm at. Okay, so let's close this poll. For you guys that are watching this recorded, you'll see what we've already chose, but let's go ahead and share it. And we are definitely showing some +1. And I imagine that's because, hopefully I didn't talk you guys into it, but I think you're seeing the same thing I am. A pretty good bounce off of a support level after a pretty strong sell-off last week. So might be like a relief, kind of a relief rally, or what bear rallies are super powerful. Remember, some of the biggest bullish moves come on bear rallies. So it'll be interesting to see if it gets all the way back up to where we started. Dan, that's pretty funny. Dan just says he clicked all the boxes. He's expecting anything. Very nice. All right, guys, cool. Let me hide this. And yeah. Oh, let's see. I gotta put this back. Sorry, folks. It's over my PowerPoint now. All right, there. So, yeah. We're at the 50-day moving average. The 20-50 slope, one's up, one's down. We're below the 20. Super bearish. That's why my monthly outlook is absolute bear rally after breaking a support level, but definitely +1. I had this at +2. I did, and right before class started, I just slid it down. I said, look, I don't want to, because I really wanted to make a call, thinking that if the volume goes down and nobody comes back between Christmas and New Year's, we just float higher. That's usually where Santa Claus rally is. Rob referred to it last weekend as just all the rookies, people that don't know how to do anything but buy and hold, buy and hold. They're usually the only ones sitting around. Call it what you will. We all have speculations on what causes it, but it does happen, and it happens often. So, yeah, I +2. I put it to a +1 to be a little bit more reserved. All right, guys, thanks. Looks like we're all in line. So let's get into the sector analysis, and I was expecting something a little bit less obvious, but it isn't. Energy leading the way, defensive down 1.44, materials are at 1.8, and this is after getting slaughtered, right? This is from Wednesday to Wednesday is what this chart is. But look at the bottom: consumer cyclical, communication services, technology, all the stuff that's been weak has stayed weak, and all the stuff that hangs in there is hanging in there. It's just the timing's a little bit difficult lately because of these markets. They like to gap up, go down, gap down, come back up. All that fun stuff. So let's get into what's strong and weak. XLE was the weakest last week, and now here it is, strong, consolidating, and we had that conversation, right? We remember what we were talking about. We said, hey, look, I know it looks weak right now, but this is something you could play kind of sideways. This will probably hang in there. So far it has. It's been a really nice sideways trade for the last well, since the beginning of the month, right? Since it came back down and parked itself on this level here. So I still like it. I still like it sideways. If you want to play something a little bit further ahead, thinking optimistic, then it could be bullish as well. So tech just looks like it poked its head up and had a sell-off. This is a fun little candlestick here, folks. Now this is interesting because this candlestick is capitulation. Capitulation is, or a blow-off top. Now I used to call them a dark cloud cover, but a dark cloud cover is actually a two-candle pattern that happens more often than you think. If you guys, we made a video about it if you want to watch it. But this is more of a gap up or a blow-off top capitulation move. So this is super common. They do exactly what this did, but it doesn't mean that it's going to change trend. But it did really pull back and broke a pretty mean support level. So I think that this rallies back up to that 130 level. I'm with you on +1. Obviously, it'll get there. Maybe 135. Chug along a little bit. But once some of those projected lower earnings come back Q1 of 2023, we might roll back down. It just depends on how many speculative purchasers are out there for 2023 moving forward. See? Fun stuff. So let's do a quick conclusion. Signs of topping inflation could be pricing itself into the market. So what do I mean by that? Well, that's the conversations that I've had with the boys around here. It's difficult to call, but when we get a good news event that pops up and there's massive selling into it, and then that selling freezes up immediately and we see it all dry up and we get a day like today or a day like yesterday where they recover from some bad news and now they're floating higher. That's all this is. It's, hey, the inflation's out of the way. We know what the Fed's going to do. If it stags, we got to look towards, okay, who said they're going to do good? Who said they're going to do bad? When did they say they're going to do good? It's just this movement of money around. Now, the Santa Claus rally, yes, absolutely can happen if the volume stays light, and that PCE number on Friday comes in even or optimistic. I think we fly, or just float. Excuse me, we float higher. So institutions hedged out ahead of the year's end. Corey made mention of this yesterday as well. There's a lot of puts in these markets, but they didn't come racing into the markets, which is why we didn't see the volatility index fly up to the high 30s. They had slowly been purchased up, but they're loaded. Institutions are not really too spooked right now. So look to revisit the previous consolidations levels into the end of the year. Yep, I made a call. It sounds like some of you guys are on board. So sentiment calling their shots to year's end. Plain and simple. This is a pick-em market. If you don't want to play it, don't. But that's what you're going to see. Things jump around. Things come off the bottom. Things come off the top. You'll scratch your head and say, that's interesting. But I think that's all we're going to see through the year's end. So economic data is still mixed, but it's optimistic. The consumer super happy, even though they didn't spend as much money as they did last quarter. I think those two numbers could be a little bit behind, one ahead of the other. We'll see if that kind of evens itself out. So with all that being said, you're basically just, hey, you're really trading your bias in the next little bit. At least that's what I think. All right, that's enough. Let's go out and take a look at a few trades. And I imagine we have some, maybe not a ton, but some. Oh, we got a couple of things I can read. Here we are. Big, not big, but a good gap up, and it looks like we're just going to kind of peg ourselves here at about 1.5%. Isn't that funny? 1.5%. Let's just calculate, okay, as soon as they're up this point, everyone stops. Or else everyone's at lunch. I don't know. We'll see where this goes or how it lasts. And we've seen these come collapsing down. We've also seen them fly straight up. So it was really funny because when we started our class on Wednesday, we were actually up pretty decent for the week, and then we just rolled right over and fell apart. Okay, let me scroll back up to the top. Joe's looking for, let me see, SAVA on a bull pullback. Let's take a look at it. To the 20-day moving average, either a 35.40 January or 40.45. Okay, well, let's take a look at it. Mm-hmm. 35.40 or 40.45. Well, it just depends on how aggressive you want to be. 35.40, you're almost there. That actually might be good. But if you're going to go to January, a 40-45 would, well, hmm. I like it. I like it on the bull side. So funny how I just got done talking about, hey, I have no clue, but I want to help. So this okay, I can see this get from 40 to 45 within the next couple of weeks, right? If this is going to participate in the Santa's Claus rally, this will be a really decent one. Now, if you could find an expiration that's not January, Joe, then this would work. If you can't, maybe you wait for this to get a little higher and see if you can afford the 40 call, because I don't want this thing to hit this 45 in 6 days, 3 days, 4 days, and have you try to unwind a 40-45 January 20th expiration, because you're not going to make anything on it. You won't make anything on it. Now, if you could, I don't know if it's got weeklies or nothing like that. But anyways, at the money, this is a pick'em, right? This is kind of a pick'em. So if you truly believe that this 45 could be achieved between now and the next few days, maybe an at the money, which is an aggressive call. And understand, you got a position side for max gain, max loss. You're either going to be a hero, or hopefully if it falls apart, you can cut it for maybe a 70-80% loss. That's why we position size for max gain, max loss. But I like the chart. I put it down as a bull. I don't like the call. I don't like the play on it. I don't like the vertical spread that far out. And it'd be frustrating, because what's tough about it, they don't make that much money. But what makes it even harder is they're so hard to unwind. They're very tough. And Joe says there's no weeklies. Yeah, so you might just be stuck with straight up. Whoops, sorry guys, let's hide that again. A straight up call. That might work. All right. Sorry guys, you have to listen to me read. Yeah. True, Mesbit, it might. All right, let's go to Sebastian McDonald's. Let's take a look at it. Range pullback. 30th December. Okay, we got a weekly on it, right? 270, 272 and a half. Man, I'm too quick to jump on my pin before I zoom in. There we go. 270, 270 and a half. Look at this. Just playing the blip. Okay, sure. If you believe in it. If you believe in Santa, right? Believe. It's all those signs that you see put up every year that drive me crazy. I'm just kidding. I like the holidays. Oh, yeah, not shooting for much. Just basically revisiting is what you're looking for. Somewhere up to this, I'm sorry, we're on this consolidation between, yeah, it's a 272, 275. Sure, and he's only going a few days, right? Just through the end of the year, the 30th. That's next Friday. I'm okay with that. Playing it tight. So, folks, that's almost sideways. I'm going to put it bull, though. I'm going to put bull just kind of sideways on that, just because you're not really shooting for, it's not shooting for 280 or 285. Just kind of something meandering, if you will. Oh, good. All right. Yeah. Robert says between the weekend up trading room and yesterday's roundup, I have whiplash. We all do. We all do. It is crazy. So it's a tough thing to trade. You guys, I like to say this a lot. You don't have to trade all markets. I found that the frustration that I've experienced personally over the last little bit takes its toll. It takes my toll on my trading, and I have a bad attitude, and so it's best just to step back and know your strengths, know your weaknesses, and just let it slide and try it again when it makes more sense. Matt Deer. Okay. Let's take a look at it. I think Corey talked about Caterpillar yesterday. I know it was on discussion for. Okay, cool. What do we got here? Let me guess. It's going to be a same industry as Cat, which Corey. Oh, that's funny. I should have read that, Matt. Diagonal call spread. January regular expiration 20th and the 6th for 34.50. Let's just get the prices up here. 430, I imagine, is right here because that's 444.50. Cool, I like it. Right across the middle there. Or a January 6th vertical call spread, 434.50. Yes, I like the surfer analogy. Thank you. I appreciate that. I like the diagonal in this one, Matt. And for obvious reasons. I know your strength, buddy. And that diagonal is much more suited for you. More room. So I'm going to put it, I'll put it sideways. But folks, I'm going to put it sideways, but I want you to know there's a little up arrow there because if you believe I'm gonna quit saying that. If you believe in the Santa Claus miracle, then it could float higher. I think a lot of the defensive ones do. That's why we had a lot of the defensive and healthcare on our bull watch in the PowerPoint presentation today, because I just feel that they will fly, or not fly, but float. They'll just move higher. Okay, watching for a breakdown on eBay. All right, Felix, let's take a look at it. There's a couple companies like eBay that have some tax restrictions they're about to hit. I didn't read too deep into it. I just browsed over it and saw that they might have some fences to cross moving forward for a short trade of January. Yeah, I like it. I like it bearish. It just doesn't really want to bounce with everything. It's consolidating. Almost feels like it's waiting for a little bit of a spill. But maybe a short trade for January. Sure, Felix. I'm okay with that. It's a pick 'em, and it's fine. There's traders out there that will do January stuff, and hey, I think that the markets will be at this point at this time, and if it's 2 months ahead, that's great. You can make really good trades like that. You just have to be patient enough to sit through all the turmoil and watch if it gets there or not. And then your management system needs to be far and few in between. So the longer you have a trade, the less you should touch it. But you guys know that. All right, let's move to. Okay. Schlumberger. Yes, I love Schlumberger. I haven't talked about him in a while. I know it's Schlumberger, folks. It's been an ongoing joke with Maverick for, oh boy, almost 2 decades now. I called it Schlumberger when I first started day trading. So it's Schlumberger from now on. It is going to be holding its own lately, maybe a sideways candidate. Yes, Dan, absolutely. It's in the right sector. It's doing pretty good. Let me see if I can get some lines up on this. Yeah, yep. Just about. Look at that crossover almost to the downside, but it's gapped up the last few days, trying to get back up 54. Absolutely sideways, sure. Let me put it down. And with the sideways trades, guys, you can give them wider berths. You can get them tight. I like to play the diagonal, or excuse me, the butterfly spreads on things like this. But the problem is with the butterfly spread, every Friday I'm doing something. If I've got a butterfly on, you have to. Here's a $2 one, 52, 54, 56. We could play it like that. That'd be great. If you're a little bit more bearish on it, maybe you could do a 50, 52, 54. See if it can come back to that area. That's what I like about them. And with Schlumberger, you do have the choices of weeklies, so you can play it week from now. You could play it into January, stuff like that. But I think this is kind of that same category that if the energy sector continues to recover and we float higher, this could be more towards the 56 by year's end. Awesome. Okay, let's go to. That's it? That's it. All right. I didn't think we'd have much. It's going to be a couple fun classes over the next little bit because next Wednesday we'll have one day to talk about. But I'll be here. We'll be talking. Okay, thanks, guys. Let me start writing these in. So 2 bulls and 2 sideways. I like it. Even though, yeah, McDonald's has got a sideways up too, because Sebastian's not really going too hard into McDonald's, not too deep, just sideways to up. Deere and SLB, all decent trades. There they are. Yep, there we go. Let me get the pin. And down sideways, and deer even slightly up. I love the diagonal spread on that, Matt. I do. I think it's great. So, and if it floats higher, you could always roll it, or if you do something shorter term, then you could just sell the next one if it continues higher. Things of that nature. All right, guys. Appreciate your participation. Moving into a holiday, we should see this float up. Watch it today. Watch it tomorrow. If they gap up and the markets move a little higher, then that PCE number, if it's free and clear, I think we just float up again, and we might be back up to the levels we had last week by week's end. So we'll see. And if I'm wrong, I'm wrong. All right, guys. Thank you so much. Have a Merry Christmas if you celebrate it, and we'll talk to you next week. Bye, everyone.